So we're going to ask him a few questions about digital assets and his view of digital assets and the potential for them in the world that is starting to unfold. And it's greatly encouraged, we think, by the current administration, as well as the current SEC head. So first of all, Kevin, if you could help people understand what is a digital asset in your mind. Is it just cryptocurrencies? How does AI figure into that world that people are defining through tokens and such?
Sure. Yeah, I mean, it's a pretty broad question.
That's a broad
question. A pretty broad issue. So what are digital assets? That's actually a good question. If you ask 20 people, probably get 20 definitions. But I would define it as it's any asset that ends up in digital form, typically on blockchain. That's kind of pretty common. A lot of people think it's just cryptocurrencies, but there are lots of things these days being tokenized. So that's how I define digital assets. The interaction with AI is, we all know, is something obviously completely different. I think one of the things that people don't talk very much about is that there are clearly a lot of AI applications happening, but if we finally realize a truly digital asset world on blockchain, AI will become even more powerful. Because if you can connect those two digital energies, that would be unbelievable. But as we'll talk about in a moment, we're so far from a truly digital asset world that people don't realize how far we are from it.
So one of the things that I hear about is it's going to be great. We're going to be able to tokenize limited partnerships, tokenize real estate, tokenize private credit. Do you see that as a reality in the future, or is that just a pipe dream?
Yeah, it's definitely a reality in the future. What I find really amazing is there are press releases every day about somebody tokenized something. Useless. Okay? And a teenager can tokenize something today. So, and I'll give you a classic example of it to show you how useless it is. It was only about a couple of years ago, I was at Apollo. A lot of very smart people, right? Brilliant, just brilliant, right? And they explained to me, they said, we tokenized a mortgage-backed security. They spent like 8 months doing it. And then they realized, we just tokenized it, we had no way to settle it. What can we do with this tokenized thing? So tokenization on its own is completely useless, okay? The only way it actually becomes effective is if once you've tokenized something, you can do things that you do with assets. Can you settle it? Can you clear it? Can you leverage it? Can you trade it? If you can't do that, it's worthless. So 99%, big high percentage of things that are tokenized out there are pretty much useless right now. The challenge is how do you integrate that with the traditional infrastructure? And actually that's where our firm, I'm not here to promote our firm Tacit, but I'll talk a lot about it. That's what we've been able to do. I wish I had brought that slide.
I tried to get you.
God, I forgot that. Because that's actually very complicated. I'm happy to, as you know, elaborate on that if you'd like me to.
Okay. Well, let's go through these questions first. Okay. Do you think there's going to be more broad-based institutional acceptance of tokenization, and over what time frame? Is it before 2030 or after? I think would be the date that we keep hearing for most of these things to occur.
Yeah. So everybody's probably heard, Larry Fink has said everything eventually will be tokenized. I would agree with that. But again, I'll come back to the issue is not can you do it, the issue is how do you do it? And how do you adapt the traditional infrastructure to make that happen? That's extremely difficult. And a lot of people working on that platform, on that issue, and it's very difficult, and we're still in the very early stages of doing that. I think it'll be one of those classic things where eventually they'll crack the code, and then suddenly everything will take off. But we're still, I think, probably 2 or 3 years away from that happening.
Okay. We certainly see a lot of growth, equity, venture capital. People invest in what's called the pipes,
Right.
to enable this.
Yes. Yeah.
Who do you see right now as some of the leaders in that space?
Sure.
And if you were looking at other aspects of the pipes, what else do you think is relevant to consider?
Okay. I mean, the obvious leaders are Coinbase, Circle, JP Morgan. Like I've always found Jamie Dimon amusing, right? Because for years he's been saying Bitcoin's a fraud, digital life. But he's got about a 50-person blockchain development team and spending several $1 billion a year. I know what his vision of the world is. He's actually been quoted as saying, I love technology because it's a winner-take-all game. And trust me, because I've been on the other side of this, they've controlled the regulators enough. Their view of the world is let's build all this infrastructure and then we'll license it to every bank out there and make everybody dependent upon us. So that's actually one trend right now. You're really seeing Coinbase, Circle, and JP Morgan kind of creating a cartel to control this technology. Another company out there that I have the good fortune of being a founding shareholder in called Digital Asset Holdings is also playing into that game as well. So they're trying to do that. Whenever that happens, you're always going to bring an opposite reaction. So we think there'll be some other competitors out there, but those are some obvious winners, and amongst them, Coinbase has done well already. I think they will continue to do extremely well. They've got 300 million clients or something in about 10 years. It took Fidelity about 60 years to get to 45 million. Like, do you need to know anything more? Right? And they're just at the beginning. They've got high margins in what they do. There's an offshore company called Tether, which is the most profitable business. Well, by the way, that was created thanks to the Biden administration. Well done. This is not a political comment. It's just a factual comment. Because, again, I was involved in tasks. I kind of watched it happen. That administration hated everything, pretty much technology. But in fintech, they really hated it. They really hated distributed ledger technology. And so they kind of forced all this business to go offshore. Tether was a beneficiary. They made $20, $30 billion a year with 20 employees. Well done. I literally had conversations with control of the currency, with people at the Federal Reserve Board of Governors, and I would say to them, you do realize that by driving all this stuff offshore, you're turning America into North Korea of distributed ledger technology. Like, do you guys know that? Or they go, yeah, we know, and we'll get there eventually. And obviously that's changed dramatically. Now, you got another group in there, and I think they're very enthusiastic.
Very enthusiastic about crypto and all things crypto and digitization. And how important do you see the SEC's role in all of this under Paul Atkins?
Well, I think generally, so you guys will be amused by this. I would go to all these meetings, and like the Philly Fed sponsoring a fintech meeting, and you'd be up. You would go to these conference after conference. You have like 3 regulators and Coinbase and Circle or whatever digital guys. The digital guys all go and women all saying, regulate us. Please give us regulations. And they go, well, we'll get to it. Literally, I've never been in an industry where I've seen people go, please give us regulations. So we obviously have a complete new regime now. And with the Genius Act, they've started with that. There's some other legislation coming out. They're very proactive about it. And Aiken is helpful to it. And the whole regime has really, really changed. There's still a lot of work to be done. And trust me, Coinbase and Circle and JP Morgan are working really hard to make sure that any legislation is very supportive of all their monopolistic ambitions. So I think that's the biggest threat, actually, to the proliferation of technology.
Although do they have any reasonable competitors in Europe or in Asia?
Yeah, there's a lot going on.
Yeah.
Oh my goodness, it's like night and day. Particularly in Asia, if you travel anywhere in Asia, they're adopting blockchain technology left and right, new technologies left and right. It's real boom time. They've been doing that for a while. So they have a huge head start. Again, this is a comment that Brian Brooks, who had been in control of the currency, kept saying, that the U.S. actually created stablecoin legislation. Everybody would want those stablecoins to be backed by U.S. dollars. So why not do it? It's not actually a threat to the U.S. dollar. It's a complement. So that's about the only thing that the U.S. has going in this, is the fact that at the end of the day, people still want to convert back into U.S. dollars, at least for the time being. So let's make the most.
And how do you see stable coins anyway
Yeah.
evolving in
Yeah.
this whole complex?
Yeah.
How disruptive are they
Yeah.
to normal banking and credit cards?
Yeah. So, by and large, I'm going to break everybody's heart in this issue. Stable coins are commodities. There's nothing unique about them. 5 of us in this room could get together and create a stable coin. They're really not that unique. Now, Bitcoin is special, and I'll talk about that in a moment. But in general, there are lots of stable coins. There are actually hundreds of them, thousands of them. I don't think there's any real edge in any given stable coin. That's my thesis. Because they're pretty much interchangeable. And actually, ironically, for them to be effective, they have to be interchangeable. So there's really nothing special in that. My own view is that, you asked about investment opportunities, the biggest opportunity, I think, is in that middleware of how do you take legacy technology and have it work in a digital environment. And doing that is really important. So I bored Susan with this. Back 50, 60 years ago, banks had this new technology. It was on things called mainframe computers. And it's how they actually process payments rather than couriers running around. Well, obviously, we've moved way beyond that, right? The internet, the electronic funds transfer, and all that. But guess what? There are still mainframes at every single major bank underpinning the existing technology. So what you really have is, I'll keep coming back to this theme, we've got existing infrastructure that tokenization only matters if you can build the infrastructure and interact with that. So one of our platforms, we actually create tokenized U.S. treasuries, where I can sell you a U.S. treasury, buy it back from you in 20 seconds, you'll get credit with 20 seconds of interest, okay? Or 2 seconds, or 2 hours. I can do that any time of day. But to do that, that's a chart I was going to put up here. We've had to figure out how to coordinate U.S. Bank, T0 broker-dealer, StoneX back there, I'd love to have StoneX, a mutual fund, okay, called ARCA, Ultimus, a mutual fund administrator, Avalanche, a digital asset custodian. So we're coordinating 6 different players, some of them digitally native, some of them DeFi, traditional technology oriented. That's the magic. The blockchain technology part of it is the easy part. The hard part is, how do you coordinate all that? We had a prior platform that people would have known as Signet within Signature Bank, where we were operating around the clock. By the way, sorry, I'm on my soapbox now.
Yeah.
So, even today, the traditional banking payment infrastructure only operates 40 hours a week, right? Every single platform breaks down once a week. Maybe for 5 minutes, maybe 3 hours, maybe days. If it's Finastra, they've broken down for days. We ran on blockchain, real-time payments, so real-time, instantaneous, around the clock for 4 years and 3 trillion in transactions. We did $100 billion a month. We never had 5 minutes of unplanned downtime. And the traditional banking structure pays out $9 billion a year in fraud. They spend $20 billion a year trying to prevent it, investigating and remediating it. In 3 trillion in transactions over 4 years, we had not a single incident of fraud. Not one. You think regulators will, and by the way, all of our transactions are totally visible. You think regulators would go, this is great. And by the way, when Signature Bank blew up, we unwound $13 billion in on-chain transactions in 24 hours. There's no way in hell the existing infrastructure, it would take them 3 months, right? So it's that superior, but unless you're tied into, unless you can link into the existing infrastructure, you have nothing, okay? And that's why I get amused by, I tokenized something, useless. I have a stable coin, next to useless. But if you can actually make it work in a particular application, you've got something very valuable. And that's where I think the world's going to go, which is that people will figure out how to dominate certain areas. So I learned relatively recently about certificates of deposit. Believe it or not, it's a $4 trillion market. and fast settlement is 3 days. It's still done with paperwork and fax. I like all the nods around the room. It's like, I feel like everybody's had this experience. I feel like I'm in like an AA meeting.
Ex-bankers.
There we go, ex-bankers, right? You love the IT department in that bank, right? It always
Data processing.
Yeah, data processing.
So he was Marine, I wasn't trying to find him.
I'm sorry?
I was kidding.
Yes.
AA.
Yeah. I was a trad five.
Thanks for
But anyway, I think what will happen is I think that middleware is interesting. I also think there will be particular niches that players dominate. But we're still very early in the whole
pretty early
thing.
on.
Very early.
I think we're early on too.
Very much.
If you're
Go ahead,
looking at a
sorry.
portfolio, though,
Yeah.
for your family office,
Yeah.
let's say.
Yeah.
One, what's been your observations about correlation of if you bought Bitcoin with other assets, if you have any observation? And two, as a percentage of the overall allocation, how do you handle that when
Sure.
you take profit, when you double down? Do you have a
Sure.
view on all of
Yeah.
that?
So overall, just on the technology play, I hopefully have given enough information to just be very wary of investing in the area, and that there are opportunities, but you really gotta understand the opportunity and also think about how the second order effects are going to happen in responses. As Susan knows, one of my, we started Tacit 8 years ago, right? The idea being that we just put payments on blockchain. I used to say the CFO of Caterpillar to pay a supplier in Brazil went Chicago Bank, New York Money Center Bank, Sao Paulo Bank, local bank. Said if they had a payment platform on blockchain, they could just get everybody, their suppliers on that platform with payments instantaneously. So that, that was the overall vision. People always come to me and go, "What do you think about Bitcoin?" You go, I don't care. Like, it doesn't matter to me, right? But I believe in distributed ledger technology. It's just a superior database. It's phenomenal, right? But when IBIT came out, we bought it then, and the reason being that what makes Bitcoin unique, and probably everyone in the room knows this, is it's unlikely there will ever be another currency, much less cryptocurrency, which achieves global scale and nobody's in control of it, right? That's a flaw, by the way, with ETH and Solana and all the others. There's somebody out there who can mint more Solana tomorrow. But Bitcoin, nobody else will ever achieve that, number one. Makes it unique.
How about if it's fractionalized through token? Does that
Like-
multiply the size of Bitcoin?
No, because there's still, that's like saying I've got $1 trillion US and now I'm going to issue pennies. There aren't more dollars around. You're just, so that has no, people talk about it could be forked and all this kind of
Right,
stuff,
right.
and quantum mechanics will change
It's
it.
a question I hear all the
Yeah,
time.
all the time. Yeah. So it's a unique asset in that way. And secondly, if you believe that the trend of human history from time immemorial that governments debase their currencies, having something that can't be debased, probably a good place to be. Also the fact that it's institutional now. Like, one of the things for me is, like, I didn't want to have like a little, some kind of technology in cold storage that I might lose the number of, like, but I'll let BlackRock worry about chasing down Bitcoin. I think more importantly is that because I think ultimately, although I'll talk about what I think it is so far, if you really had something like that that's a unique asset, that's a permanent store of value, that no more can be created, it's the kind of thing that I would argue you ought to own some of it for a very long time. By the way, in other parts of the world, people who don't have access to banking use Bitcoin. It's better than US dollars. It's actually easier to move than US dollars, right? And then lastly, 50 years ago, no institutional investor owned real estate. None. Now they all do. 25 years ago, no institutional asset investors owned hedge funds. Now they all do. And I'm pretty confident that 25 years from now, every single institutional investor will own
Some
Bitcoin as a hedge. So that's why when it first came out, we bought some, and we're going to hold it for even though Dennis calls me up when it goes down, goes, should we sell? No, man.
Spoken
Just-
like a true head of a family.
Right. I said, forget about it. So that's my view, and I'll probably be wrong, but that's my view for now. Go ahead, sorry.
So we already talked about regulatory risk and our view, which I think this is a good environment. But if we work hard and we put all these structures in place over the next 3 years, and the next administration comes on and then increases regulation, what do you think the impact of that would be?
Again,
Is it too late? Is the horse
yeah, I think,
out of
yeah, the horse
barn?
is out of the barn.
Okay.
It'd be really hard for them to, look, one thing the Trump team realized, I think probably everybody's seen this, they woke up one day and said, hey, 40 million people own, crypto assets, maybe they care about it.
Yeah.
And I think once, and again, the fact that JP Morgan now and the others are behind it, I just don't see it. I don't think they're going to put that genie back in the box. Yeah, back in the, yeah.
And you already talked about the different types of Bitcoin, which ones you prefer. What do you think, and as you're going forward and using this and using the tokens, how do you think people should think about the right entry points into some of these other venues that will take advantage of a developing? I think it's going to be a totally dramatically new landscape of ways to handle money and transfer assets around. Because be tokenizing hedge funds, they'll be and then have a means to settle and do all of that. So I think it's important to go to how will it evolve from just talking about tokenizing to actually something where instead of having to get these K1s and then figuring out your statements and all of this, it will be it will be sent you through blockchain and much easier to track and monitor. I think that's what Tacit has the ability to do, and I'd like you to talk a little bit about that.
Yeah. Well, the way you think about Tacit in particular, it's a T plus, I think it was a T plus 0 seconds exchange, right? So still equities, we were trying to figure out, we're trying to remember, like, do equities trade T plus 1 or T plus 2? So that's what we're doing. Like, that's our world. I think generally, again, I would just come back to show me the business use case that makes your technology solution indispensable. If you can't explain to me what problem it solves, who can't live without it, and how you're going to get paid for it, don't bother me, right? Those are 3 fundamentals of business. So there, you and I were talking about, there's a very successful now issuer of stablecoins, and I was talking to them the other day. They go like, we can't make any money at it because nobody will pay us for it. Okay, but they're the biggest issuer of stablecoins. Okay, that's not good.
Actually, you can now create them on Gemini, just to let you know.
There we go, and that's the problem. So there we go. And as I said, you can all walk out of this room here and tokenize something and issue a stablecoin.
Yeah, you can also do an app on Gemini too. So a lot of these things are going to be a lot easier for people to access.
So look for applications, look for real use cases. I think there'll be a lot of them. And I think there'll be traditional companies that figure out how to use it effectively.
And who do you see understanding this from a company that's not a JP Morgan? Or are they really just so far ahead already? Who else do you see out there as grasping the potential? Not just in the U.S., but...
There are private companies. There's one very good one called Fireblocks that
kind
of enables people to actually have digital wallets and use them. Absolutely brilliant, big market share, very successful company. That's a good example. I think Anchorage, probably a lot of these names people won't know unless you're in the space. Anchorage has figured out the banking angle pretty well.
Anchorage is a distressed credit company?
No.
Different.
They're a digital asset player. A lot of the companies, a lot of the attractive companies are private companies.
Right, so they're all private right now. Right?
Most of them are private.
That's what I think as well. And that's what we have heard. We invest in a small venture fund that's been doing this, and all those names are in the portfolio. So it's interesting to hear you mention your name. So they're getting some traction in their development.
They are actually,
So once again, I see it being dominated by tech guys who will be investing in the series and then in growth equities, and then when it goes public, we'll grab it up. And I was just at a lunch with Gavin Baker from Atreides, and he himself owns 2 of the ones you just mentioned. So,
Okay.
yeah. So it's very interesting hearing his perspective, because as a technology guy, he's looking at it from a technology perspective and how useful that technology will be
Yep.
going forward in
Yep.
the world today. So I think we could open up to a little question and answer. Let's start with
Great.
Paul.
The elephant in the room in my mind is, what would you say to Michael Saylor today? Strategy. And maybe you could tell everyone. Does anybody follow strategy?
Michael Saylor is the mutual fund guy who's got to leverage.
Game over.
Okay. Fair enough.
I think what he's got to figure out is ways. So Michael Saylor created MicroStrategy. There's none of his strategy, right?
Yeah.
And his idea was just to go out and basically raise money and buy Bitcoin, a public vehicle,
And
then leverage it. And for some reason, people reward him by paying a premium to NAV. I don't know why. Never made sense. And then there are a bunch of imitators, and it's sort of falling apart. I think again, the advantage he has, he was the first one. He's the biggest. He owns a bunch of it. It's not a bad place to be if you believe in Bitcoin.
But it can't like 3.5% of Bitcoin worldwide.
Yeah.
Something like that.
Yeah. And there's one in Metaplanet in Japan has been very successful. Now that's been more successful because they don't have any Bitcoin ETFs in Japan. So that's still that was trading like 4 times NAV. Now it's trading like 1.5 times NAV. So, but I think what those entities are going to do is they'll become like Bitcoin Plus, right?
Yeah.
And there's another one that's coming out that I'm very familiar with. Yeah, and they're going to come out as Bitcoin Plus. So you got IBIT by Blackstone. That's just Bitcoin. So you can take the Bitcoin and lend it, borrow, trade it, whatever.
Services.
You can earn just like you've got Core and Core Plus. There'll be Bitcoin Plus will be their play. Maybe they can pull it off.
Yeah.
Kevin, I got 2
He's
questions.
a smart guy though. That guy knows what he's doing. He's not a clown. There are lots of clowns. He's not a clown.
You said that the traditional and the blockchain are apart. What's keeping them from getting together?
Just it takes time. It's the
They
engineer.
can't think about it? I mean,
No, they can, but so as brilliant as these engineers are, engineers tend to be good at one thing, right? So they learned SQL Server, right? You go to them and say, hey, here's some brand new language. It's actually harder than you think, than how they work together. Then there are the natural human activities, right? If you spend your whole career with one kind of system, and somebody shows up and goes, I've got a better mousetrap. What actually happens in technology is the legacy system doesn't just lie dormant. It responds, right? So there's that interaction that goes on. So you got the classic, it's new, therefore I don't want to do it. It's new, therefore it threatens my life. And all that stuff's going on. So that's an obstacle.
but it's not just that. There's a technology problem as well.
No, I would argue that that's a really good,
The
question.
mainframes are still running.
They're still running.
Yeah.
But eventually what happens is you do figure out how to make them run better.
How about virtual banks? Because everyone now, like Robinhood's become effectively a virtual bank, right?
Yeah.
They could be.
There'll be lots of them.
Yeah,
I think
they could be a real
banking.
disruptor to JP Morgan.
Yeah.
I think that whoever starts to use this more effectively, the soonest,
Yes.
is going to win.
Yes.
And it's going to be somebody, maybe not a Robinhood, but someone who's a little more thoughtful about innovative technology.
Yeah.
And understands, because, if you're wiring money around the world, it takes a week, they take 7 points out, it's a lot. And there are
Yeah.
other ways to do this.
Yeah.
So have you ever
It
heard of
just takes a while. It's like climbing learning curves and everything else just takes a while.
Have you ever heard of a company called Rain Cards? They're on the Visa network, and they do payments on the chain without coming off the chain. You can get a
Yeah,
card.
I have heard of them. Yeah. I'm not that familiar on the retail space. I tend to be more focused on wholesale because it's just not an area.
The Visa
for me.
and
Yeah.
MasterCard. And
Yeah, Visa, MasterCard, those guys are being very progressive about adopting blockchain technologies. They don't feel threatened by it.
Kevin, you mentioned
Yes, sir.
early on the importance of settlement, right? Stablecoins, creating stablecoins is a wonderful thing,
Yeah.
but if you can't settle a transaction, that's a problem. And I think you also hit on, and this is to Paul's question, I think, in part, the integration of TradFi and DeFi, right?
Yeah.
And I think you were also hinting about the fact that a lot of the technology is, to use your phrase, legacy technology,
Yes.
tech debt, right?
Yes, yeah.
And so my question is, are there any companies, you seem to be very clear on what the landscape looks like, are there any companies out there right now that have that infrastructure in place, that have developed the ability to settle both DeFi transactions, the stable coins of the world, and TradFi, buying and selling Apple? So you're shaking your head no, and as you probably know, most of Wall Street runs on technology from either Broadridge, FIS,
Right.
or Bayonets.
Yeah.
Okay,
Yeah.
so they sit in between these transactions. They help
Yeah.
facilitate the counterparties,
Yeah.
right?
Yeah.
And so, are there any companies out there that have this capability?
Actually, you mentioned Broadridge. Broadridge is doing repo now, I think, on blockchain
Yeah.
using
That's right.
using Canton networks, digital asset holdings. So there is stuff like that happening. That's a good example. I just hadn't thought of that. But they're relatively few and far between.
But you would think, though, that this is to get that. This is the Gordian knot, right?
Yes.
If we can create this platform,
Yes.
we then can settle transactions no matter what their form is.
Absolutely. Yes.
Okay.
Yep.
Way in the back. Way in the back.
This is not really a question, it's more of a statement. You mentioned Apollo, you mentioned BlackRock,
Yeah.
you mentioned GE Capital.
Yeah.
I know Gary Wendt,
Oh, great.
and I interviewed with all three of the Apollo guys when I was looking for a job.
Okay.
And I interviewed with Pete Peterson, who was
Oh,
co-founder
yeah.
with
I know.
Sure.
Stephen
Yeah.
Schwartzman.
Yeah.
So, that's all.
Okay.
Small world.
Wonderful.
Bruce.
So the first part of the discussion that you two started out, you were talking about the infrastructure-related issue. And
Yeah.
until the infrastructure-related issue gets solved on a large scale, governments, banks, and so on, it's
It's
really
hard
not going
to
to come to
tokenize.
fruition.
Yes, yes.
And because we've seen and lived through a bunch of the history, two things came to mind as you were saying that. The first is, in the early 90s, for the first time, mini computers were affordable to be leased by hedge funds, if you could remember.
Yeah.
So we had clients
High frequency trading.
that had been like programming on the VAX computer system at Drexel, at the Fixed Income Research Group. All of a sudden, there were minis, and they were saying, we're going to rebuild some modeling, but it's just for us for doing things. All well and good, but how many years did minis last until desktop computers ended up becoming strong enough?
Yeah.
That market disappeared.
Yep.
The other thing that popped into my mind is you were making comments. Remember when DEC went out of business in '98? All these Wall Street firms said, gee whiz, this is what we have. We now have to transpose to something. My firm ended up having a client that was a software company that would come in and say, Kevin, we're going to reverse engineer to be able to make it so you can transpose your content onto a new system. That was like walking through Jello.
Yeah.
So do you believe that now, even in this day and age, to get to the point where the U.S. government will say it's now easy enough and affordable enough to upgrade, replace hardware and software, that we as a government can go and run this, and that the banks also are able to say, and we're on like new system, we're not still running Fortran 4 with what for?
Yeah.
Is that what's really needed to be able to get to
I hope not.
more creativity?
Just the moment you say the government is going to do something,
I know, I'm
kind of
just
just lost
like
me
that.
right there. You know, if that's what's needed, it won't happen. It'll happen other ways. Yeah.
Were you surprised when Grayscale finally won its case to be able to do a spot ETF? And my understanding is they actually are not doing so well because their fees are so high.
Yeah, I mean, they were charging enormous fees, right? So they were doing okay, though. I mean, I'm not intimately familiar with them, but all I know is I see their ads all over the place, and I guess they got a pretty big ETF. Yeah, that was surprising. I have to tell you that for Circle, Coinbase, all these folks to take on the government, you know, in years past, that took a lot of guts.
Yeah.
That took a lot of guts. Are you kidding me? You don't sue your
It was a
regulator.
long campaign.
Yeah, yeah.
So I would also, back to Bruce's point, you know, only 40% of people who use computers are in the cloud, okay? So there's still a long way, because until you're in the cloud, you really can't even begin to do I think the tokenization and the manipulation of the data so you can track it all. So, you know, there still needs to be rapid transference of computer into the cloud, because then it's much easier to execute what he is. So if you don't, you know, the people that are more quickly moving everything into the cloud are going to be the winners, and that's why I think Asia is ahead, because the conversion to the cloud is like 80% done over there. We are slower here in the U.S.
Hi, thanks for your comments. Question, I've heard that tokenization of equities is being put forward and being talked about at lots of different places in Washington, maybe New York also. I guess the question that I have is I could see tokenization of artworks, buildings, things that are a little bit hard to, they don't clear and settle in the hundreds of millions every day. Equities, it just seems like U.S. equities is one of the most liquid things in the world. Why would anybody start with tokenization of U.S. equities and not start with the more as like a Van Gogh artwork or a building? It seems like that's a better place to start. I'd love to hear your
Well, I
thoughts.
mean, JP Morgan's starting with repos.
Right, and I was a repo trader actually.
We're doing U.S. Treasuries, so
right.
some of the very liquid market is a good place to be because it's so enormous. And when you talk about equities, the issue with it is that it's still relatively inefficient. It settles T+1, right? It's still 1 day to settle. Everything we've ever done is T+0 seconds. So when you and I agree to do a transaction, it's settled immediately. That's far superior.
Yeah, you get the money in the account.
Off the charts.
Well, I mean, I hate tracking down money and when is it going to get to the account? If you know it's there as soon as you sell,
As soon as you do it. Done.
You can
Okay.
then
And by the way, you
rebuy
have
something else.
And
Yeah.
by the way, you have a permanent digital record of that transaction.
Right,
So
instantaneous.
again, I try to explain this to regulators because we actually created then a digital bank network to do this amongst banks. And I explained to them, you do realize that now when you want to do compliance stuff, you'll be able to see every single transaction. I mean, I own broker-dealers now, right? You smarsh everything. So, right, if people know that organization. And so if the regulators want to look at something, they have to call up Smarsh, get all this data, and try to sort it out. If it's on blockchain, they just look at it on like digital instantaneously.
Because it's
It's
permanent ledger.
just superior technology. It's quicker, it's safer, it's much easier to audit. So it's just a better way to do it.
I get what you're saying. I'm just thinking like every time that I bought a house, I pay $6,000 for a title search, and I can imagine somebody in a green shade hunched over a desk searching through like hundreds of papers at my county, thing. I mean, it just seems like there are some things that we do that are circa 1780 technology. The U.S. equity market, nobody can say that that's 1780 technology. I'm just wondering, why not start with the most inefficient and then move towards things that, yes, you get an increment, but it just seems like there are some things that are still in 17th century technology.
Yeah. So again, go back to the things that are relatively modern. They're already using technology, so all you're doing is upgrading technology. It's actually easier. Let me give you the title search thing, because believe me, I've taken a look at that because it seems so obvious. The problem is you have multiple different state and local regulations.
Sure.
Absolute nightmare. Absolute nightmare. And you've got an entrenched set of players that will fight you tooth and nail. So while you look at it and go, God, it's so antiquated, why wouldn't we do that? It's actually not, just like I would say AI, if everything was on blockchain, you could use AI more effectively. It's already on a technology platform that you can adapt, as opposed to a non-technology platform. The biggest issue is actually getting people to use it. So we're looking at certificates of deposit, CDs, and it turns out, funny measures a $4.4 trillion market. The largest broker does like $8 billion a year, tiny. But they've come to us and said, we want to move our entire business onto blockchain. God bless you. Because now I've got the customers, right? The hardest part is the whole build it and they will come is really, and we've done it, but they gotta come, right? So it's going to be places where somebody sees the light and kind of makes it happen. The other comment I want to make, which I find amusing too, is all these brilliant cryptologists and mathematicians and technologists, when it comes to financial, they're clueless on financial services. And it is absolutely amusing to watch them at work.
Right.
Because they go, but it's just great technology. And we go, well, but nobody cares. like, again, unless you can make it work within the existing infrastructure, it is worthless. And so it's really, there aren't that many people who actually understand both worlds.
It's a little bit like...
Which is one of the reasons it's tough to adapt, because you got to understand the new technology and the old technology. Right?
That's why people aren't adopting more EVs, because there's nowhere to charge them.
Oh, yeah.
So I'm like, okay, well, great idea, but hard to execute.
Yep. Or get them repaired when they break down.
Just one quick question.
Sure.
On the stable coins, I've noticed an outgrowth of payment provider companies that are adopting stable coins, especially cross-border.
Yeah, sure.
Do you consider that a viable long-term business play, or would you consider, I think what Susan said before, more viable, where somebody across the border could create their own stable coin and then just send that to their counterparty across the border?
You can do the latter. It just won't scale. It just won't become very big.
Well,
So
can you just do it like individually without
yeah, you
needing to scale?
could. You could, but again, that's as a business opportunity. It's not a big opportunity, right?
Well, no, I'm saying it would take away the whole business opportunity if you could do that, right? Why would you invest in any of those payment provider businesses?
Yeah.
Because you'd just be doing like your family has a stable coin.
Yeah.
And that's it. And
Yeah.
that's what you use.
Yeah.
You just got to scale it. You got to figure out a way to scale it, right?
Yeah,
So I can only
Gemini's already doing it. I didn't
Yeah.
even know that. Then they might just destroy the whole.
Professional, $3 a month one.
It'll take a while.
Yeah.
It'll take a while.
Western Union just hired Rain cards.
Yeah. Yep. I got it. Yep. There's a lot going on.
Yeah.
So maybe it's going to come faster than I think.
About the tokenization of U.S. equities, do you think companies could use that as a way to give shares to employees? I mean, without having to issue more stock or to split their stock, keep equity prices higher, not have to do like what Netflix did, cut from 1,000 to 100 to give more access to employees?
Yeah, I'm not sure that the technology will have any impact on that, really.
Yeah, you still are issuing equity.
Yeah.
You still have to
Still
put
issuing
that
equity.
into your balance sheet.
Well, could you maybe issue it as a commodity, like issue Bitcoin or another stable coin to the employees instead? So it's not technically a securities
You
issuance?
could. There still just has to be something underlying that
Right.
stable coin,
It's still,
right?
I personally think of it as a more efficient way to securitize things, right? Because
Definitely.
if you're trading mortgages, that's like 5-day settlement. For structured credit, it can be longer. Loans take 2 weeks. To me, leveraged loans is a class you would definitely want to do this with, because it takes 2 weeks to settle a loan, right?
Yeah.
And then you would do it instantaneously. So,
Yes, it can be a form of securitization. One group has approached us and said, look, you've got banks who originate a loan, then a mortgage loan, let's say, and they go and then sell it to Fannie Mae, Freddie Mac. Then the Treasury Department then buys mortgage-backed securities. That doesn't, and they call that margin. Well, what if they tokenize it at the source and create a platform where they could now just trade it amongst the banks? Now you could actually gather up a whole bunch of mortgages, not have the money you're paying to Fannie Mae and Freddie Mac, and actually now offer a money market security to your depositors paying higher interest rate. So I think that's a long way of saying that I think tokenization is really a form of securitization.
yeah.
Another concept, just to leave everybody with, is that at the end of the day, it's all about immobilizing the underlying asset, right? So it never moves, but you create a digital representation of it. And once you've done that, you can trade infinitely around the clock. And the blockchain will track who owns it, what they own, how long they own it.
That's
That's it.
That's
You now know everything
24/7.
every technologist
Yeah.
knows.
That's where we're going, 24/7 trading, guys.
Yeah,
They talk about it all the time, but I think it'll happen as soon as this
yeah.
is
It's
more
in,
widely
it's in
accepted.
process.
Yeah.
Yep, it's in process. Great. Anything else?
So today, most of us do not use crypto or digital assets for our day-to-day transactions. And I'm sort of always curious about the horizon and timelines because in 5 years ago, obviously blockchain was what's going to change our future. But in terms of how long do you think it'll be before we all are using blockchain in our everyday life? Because it's not here today.
Yeah, again, I think it's going to be more infrastructure. So I'll give you an example. Like, I never carry U.S. dollars anymore. I can't remember. I had last time I had a U.S. dollar in my pocket.
So this is your wife pays.
No, I'm sorry?
Valet.
I know, it sucks, right? That might be a business. Give valets like QR codes or something. I feel badly, but I don't carry this. So I would just argue the technology is back there. We're just not.
Just looking forward, are we 2030, 2035? When will we be seamless and digital? Because the
You're not gonna
promise,
be
everybody
seamless
talks
by
about the promise,
2030.
but what I observe
I
is
can
that
see
the timeline continues to elongate
Yep.
for
Yep.
adoption.
Yep.
I
Yep.
mean, a lot of it is really dependent on so many things happening in the next 5
Yeah.
years. It really is. There's a lot happening with technology, with AI. This will enable this to happen more quickly. I do believe it, as well as everyone getting on the cloud.
Bill Gates did capture it really well. He said that new technology, people overestimate its short-term potential and wildly underestimate its long-term potential. But long-term, it's going to take a while. But there are lots of things happening, lots, and now more than ever.
But
So
you've been
it'll
working
happen.
on Tacit for really 8 to 10 years.
2017.
Right, so.
Is that when we started? Geez,
Yeah.
9 years.
So then almost, already
That's
to
young
get to
man.
this point, that's 10 years. A lot of this stuff that we're only seeing today, people have been working on since 1970s.
Yeah.
Susan, what is Tacit? You mentioned it
Yeah.
before.
Yeah, so that's our platform that we started by tokenizing U.S. dollar deposits within Signature Bank and then Customers Bank, and now we're tokenizing U.S. Treasuries. And so that enables, and we're starting first with the digital asset ecosystem, with Gemini, Galaxy, B2, C2, all these guys, so that we've created a platform where it's around the clock, real-time settlement of U.S. Treasuries. As I said, I can sell you U.S. Treasury, and you can own it for 20 seconds and sell it to him. Who gets credit of 20 seconds of interest? Then he'll own it for an hour, sell it to him. He'll get his hour of interest.
Yeah.
And you can do that around the clock.
That's how the stock loan business works. It's 24/7. You're
Yeah.
earning interest
There we go.
over weekends.
There we go.
Right.
But we're actually trading it. We can
But
trade
if you
it.
trade it, though,
Yeah.
real time, right?
Yeah.
It's great that you have the, as Susan said, the plumbing in place on the
Yes.
back end.
Yes.
But if you don't have the front end that's also operating on an atomic basis, right?
That's what we.
So
It's
you
all
have
API based. Somebody can sit at a screen and trade it. But there's a good example. Like it took us 18 months to build the platform, and we spent the last 6 months now going back to the crypto world and signing them up onto the platform. When we get to we're at about 30 firms, and we get to about 50 or 60, then we'll start to see real volumes.
And when you say firms, what are these broker dealers,
Again,
asset
well,
management
again, it's
companies?
mostly in the crypto world. Market makers in the crypto world. We just added crypto.com, which is a big exchange. Coinbase is very aware of us. They don't like us because they like to be doing what we're doing, so they'll try to imitate us. But yeah, so it's market makers, it's users of digital assets, and it's exchanges.
So but it sounds like some of the members of this audience are not regulated bodies.
What do you mean?
In other words, they're not subject to regulation, right? If I'm buying and selling crypto, I'm not regulated, am I?
Yeah, but we're so the underlying, like, get the details. The underlying asset is a mutual fund that was actually authorized to issue mutual fund shares on blockchain called Arca. Only 2 firms have been allowed so far. I think now there'll be a lot more. So that's regulated. We're doing it through what people are signing up to is an account at a broker-dealer. That's regulated. And then we have U.S. Bank involved. They're regulated. So all that's regulated. We did do it as a Reg D private placement. That's actually the mechanism. That's a lower level of regulation.
Do you have an ATS for this?
Yeah, that's what T0
Okay.
provides. Yep.
Oh, so you're a client of T0?
T0 is a partner in it.
Okay.
They're actually a broker-dealer. The way it's set up, we can actually add up to 6 more broker-dealers to this platform. So
Okay.
StoneX and players like that. There we go. Got it back there.
I don't know if this is too detailed a question, but now I'm in trouble. It's 3 a.m, U.S. Eastern Time.
Yes,
And
sir.
somebody comes onto your platform and wants to buy $3 billion of the 10-year. Now, the U.S.
Well,
Treasury
right now we're
market's
just
not really
doing.
open.
Right now we're just starting with U.S. Treasury bills. Just starting with
Okay, so
bills.
somebody wants to
But
buy
eventually
$1 billion
we'll
of
add-
a bill.
Unlimited.
So how's the other side of that trade being hedged?
Well, they can hedge or do whatever they want. We're matching the seller and the buyer, and they're trading instantaneously.
You're a broker, not a trader.
Yeah.
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 You don't need the deepest pockets.
No, it's buyer and seller.
And there's no
By the
risk
way-
in it. Do you have to have any reg capital?
There's no settlement risk. Everything happens instantaneously.
Okay, but
Which is-
but the Treasury market's very illiquid. The real Treasury market's really, the real bill market, I guess just like, is very illiquid at the time. So that trade might go through, but if either of those parties need a hedge, it might be difficult.
Yeah, but look, eventually we'll add hedges as well, right? You got to start with something simple that everybody can do, right? And then we'll take it from there. And treasuries are the building block in the entire financial system.
Sure.
So that's why
It's kind
why
of
you
good
start
because
there.
if something happened overnight in like Russia or something.
Yeah. But we'll eventually add everything. Like we do want to do equities and everything else. Think of a platform where you can do T plus 0 seconds, like real-time settlement of any asset. Pretty exciting, right? That's why we're excited. Yeah,
All right.
it's pretty
Well,
cool.
Thank you very much,
Great,
Kevin.
my pleasure.